start with the Australian dollar because volatility has spiked over the past couple of days, but it looks pretty sticky around that 72.50 mark, trading slightly higher today. And yes, we have seen a bit of broad US dollar strength, but it's been pretty immovable over the past couple of sessions.
That's true, Cara, and I very much appreciate your very technical term there. It's these rallies also in the equity market as well. They look very impressive and everyone wants to get involved, but then they tend to sort of just simply reverse and you get exactly the same phenomena to the downside with the same similar kind of reassurance that you're on a fresh trend to the downside, only to see the market whip back yet again. And the extent of those moves in the equity markets have been extreme. I mean, almost daily ranges again and again and again that are akin to a whole month trading range not so long ago. So very volatile in the equities, less so in the currency, but you're right, still whipping around a little bit, but at least in a reasonably kind of predictable corrective fashion. Now, I could be wrong and we could be nearing the major low for the Australian dollar. And I guess a number for people to keep in mind if the Australian dollar were to be turning around in a long-term sense would be around that 74.30 area. That's a long way off at the moment. An early warning would be around sort of 73.25. But for the moment, I think it's probably in a range of something like 72.55, 73.10, and it's starting to roll over again. The daily chart there showing that sort of good rally, but just petering out. And as you said, a bit sickly and rolling over a touch. Doesn't mean the upside isn't finished with. It just suggests that overall the bigger picture, that massive big downtrend where we've come down from 77.5, remains in place. And I think there's still some significant risk to the downside. A lot of this buying would be exporters who just see such great value here compared to where we were just a few months ago, and they'll be keen to buy. And a lot of people are trying to buy both the decline of the iron ore price and the Australian dollar at the same time. If it doesn't work out for them, then we're going to see a capitulation of all those positions all over again in coming weeks. And so that is a risk scenario we can't ignore, and that's one that I'm tending to highlight to clients at the moment. But the Australian dollar is under pressure from both an external and an internal point of view. People are very much wanting to focus on the roadmap and ignore the data, the kind of data we saw today for Australia's ARG Services Index, which was really catastrophic data, but we know why. But then again, it is an average of all the states combined. So those numbers don't reflect just how bad it is in New South Wales, Victoria. So the economic data is bleak, but everyone is trying to look past that to the roadmap coming out of lockdown. But I think people are overly enthusiastic about it's almost people have this light switch mentality. Oh, we're going to open up, light switch, click, everything's fine again. It's not quite going to be like that. And it's certainly not going to be anything like what we saw on the previous opening up out of the big lockdowns of last year. So, and there's all sorts of reasons for that. I think I've said them too often on your show, Cara, but it's not going to be the same and people shouldn't expect it. Those people who do expect some kind of miracle recovery, economic rebound coming out of this, are going to be seriously disappointed. So that's a consideration that weighs on just the domestic economy's ability to support its currency. Currencies obviously are very much about the external account. One thing working in the Australian dollar's favour is going to be continued high trade surplus numbers. We're getting used to those now, but they're largely driven by imports still being well down on 2019 pre-COVID levels. Exports are up, but only up about 5%. Imports are down about 10%. That's giving us these massive trade surplus numbers. So it's not necessarily a positive for the local economy, but it is a positive for the currency going forward. So we'll just see how that plays out. But that's about the only positive I can think of. And on the trade front, we have the long-term deterioration of our relationship with China. We already had that. It's just intensified. Meanwhile, the President of the United States is doing all he can to make amends with China. So Australia risks being left a little bit isolated there diplomatically. not completely isolated, it's an extreme term for the situation, but to give people a feeling for what's going on there. And also, we've managed to upset Europe, which we were looking to have free trade agreements with going forward. They've certainly stalled those conversations. Nice to see the French ambassador coming back to Australia. I hope he'll enjoy himself again in Canberra. But the relationship is tarnished long term. We've strengthened our relationship with the UK and US, but that's about it. And these things don't, they're not an immediate factor, but they are a long term weight on our trade performance, particularly our relationship with China. I mean, China's the only reason Australia hasn't been in recession for the last decade almost. It's almost that big an impact, positive impact for our economy that China trade has been. So it does matter a great deal. So the currency is a little bit vulnerable long term, sideways now, but a bit of a long answer to your question, Cara. But I think the Australian dollar is still looking to the downside on a medium term basis.